close to when I...
Hello, everybody. All right. Wow, what a day. What a day today. What a week. Let's get into it. How's everyone doing? I am tired, man. Just a lot of travel. But I'm back. I'm gonna really quickly post this stream out on my Twitter because I'm not streaming to Twitter for whatever reason. Give me 1 second. And then we'll get started. Where is my feed? I'm doing good. It was a fun little getaway trip. Nothing crazy, but I'm glad to be back home. I just hate traveling. It just takes it out of me. I'm just so tired. Honestly, I was debating whether to come on live today because I just need to get some rest. Okay, I just posted that. All right, let's take a look here. What do we got going on? Hey, what's up, Tams? What's up, Tony? What's up, Matt Napoli? This is not Weeble, William. This is Bookmap. Allows you to kind of see where orders are hiding. So S&P 500, we're obviously seeing a lot of volatility today. I'm gonna just start off, right out of the gate, looking at the S&P 100 advanced decline line. What we're seeing here is the largest market cap stocks in the S&P 100 or 500, sorry. Largest market cap stocks in the S&P 500, and you can see today is pretty much fully blown out, correlated to the downside. Everything's down except for a name or two. AMD, right? AMD is actually up right now. Okay, and then a lot of names, you can see these little red lines. So for example, NVIDIA, it was down significantly, over 14%, right? Tesla was down roughly around 10-ish% too. And a lot of these are coming off those lows. If we take a look at the heat map for the S&P 500, we're pretty much all red here too as well. So a lot of volatility. Now in last night's market brief, the quick one that I posted up on Patreon, we talked about what's been going on overseas. The Nikkei, sorry, that's the DAX. Where's the Nikkei? There's the Nikkei. That ended up being down 12% on the trading session. So there's obviously a lot of things taking place there. You can see that the yen has been seeing quite the big spike there too as well. And are we seeing right now somewhat of an overreaction in the US markets? It's perhaps, but if we take a look at volatility, I mean, it's still rather high for the trading session, but this thing flew up. If we're just looking at the VIX, I think we got to look at VIX futures instead here, but we'll just look at the VIX for right now. Went up all the way to 65.81. It said it's come off, but it's still rather elevated. So if I look at this from like just a shorter term perspective, you got to wonder here, who blew up. So like there's probably some sort of, most likely a volatility fund or something like that that took the brunt of this force, and we probably won't know that today, tomorrow. It could be a while, but we'll probably find out more about what specifically happened. But I think today it's really just about volatility. And going into this last week, volatility was the implied moves, the expected moves were just gigantic, like huge. And it kind of opened the door for saying like, yeah, there's more risk in the system here. The markets are pricing in more risk, and they were right to do so. But I don't think that's necessarily, like, if you're stuck in trades, you know, that's what, obviously, that's not fun. It sucks. But I want to be like pretty clear here when we look at the market, and I'll use the market as the SPY, right? S&P 500. I mean, yeah, it's pretty dang crazy. Pretty crazy move, right? In 3 days, we're down here. We're well off the lows. But really, I mean, we're just going back to April, right? Right now, we're trading back to where we were in May at the beginning of June, basically. So we're getting some pretty big volatile moves. People tend to overreact. They say, buy this, do that. But we're really in the midst of volatility, and you got to just approach the markets much more carefully in the midst of volatility. This will calm down at some point. Things will tighten back up again. If we take a look at the Qs, right? This one's at the highs of the trading session today. Pretty huge move down. Right, this one went into correction territory, which is 10% plus off the highs, right? This was down almost 16% off the highs, and we're seeing a reflexive bounce back right now. Still down on the trading session, right? We're down 2%, which has paired a lot of the losses. And as this is happening, I just want to remind you, implied volatility is still elevated. Like, it's still really elevated. So if we go into the trade tab and we look out for the remainder of the week, we're still looking at a $20 expected move. So I mean, this thing could be right back up to the 50-day moving average, or it could be cracked below the low in the next day. That's how wild this volatility is here. So to act as if you know exactly what's going on, say it's this or to say it's that, and to celebrate in the middle of volatility is just a recipe to get probably smashed, especially if you're not willing to change and adapt if you are incorrect on a position. Yeah, so how do you approach this stuff? If you're looking to actually buy these dips, you typically start by nibbling. You start small. If you go full bore right into it, you can be very lucky, but you can also be quite upset if it continues its little descent. IWM taking a big old hit today. It honestly looked like Russell was going to get limit down today, but we paired a lot of those losses. Now, if we take a look at the Bookmap, you can see that we're coming up into an interesting level. There's about 500 plus contracts over here. So to get through this might result in a nice little, pop. Definitely more volume would enter in. But then above us, even higher, there's like 30, almost 4,000 contracts, 5330. So there's a lot of stuff going on above us. And it would be interesting to see like, hey, so last time we were at this level, we got rejected, right? Now it's coming back up, round 2 fight. Sorry, I'm blocking the microphone. But now I would be paying very close attention up to that 53.25, 53.30 kind of range there. There's some just big orders all around, even 54.37. Beneath us, 5,200, 5,100. I would imagine 5,000 would grow in size too, but that's be kind of where my eyes are peeled. Now, as far as the expected move for the week, we're trading on the SPY's expected move. Now, I changed up the expected moves a little bit for the SPX because volatility just blew out going into the session, but we're just trading roughly right now at the expected move for the week for the S&P 500, which was the lower levels 519.58. Give me a second here. Check a. So we're really doing what has been expected. And then today we opened up. Where did we open up? We opened right underneath the quarterly expected move today. All right, so the S&P 500 quarterly expected move, that's what is expected for the quarter. It's August, right? We got July, August, September. And right now we're just doodling around the weekly expected move. So really the market's not doing all too bad here, given the fact that volatility is where it's at, right? Volatility is, I mean, VIX futures are at 29.35. The VIX 35, 60, which could be a little concerning here as the market's holding up rather well. If these VIX futures continue to kind of maintain their posture, it just tells me that just buckle up. You're in the midst of volatility. If volatility is not going to come off on a move higher, that means we're probably going to see a much more volatile swings back and forth, and it's gonna throw people for just a loop. That's just kind of what happens. So as of today, so far, we haven't really traded much up or much down for the most part in the S&P 500. In the Qs, we got a little bit better of a bid, but you can see at the opening bell, at the low, I applied an anchor volume weighted average price. We haven't really even tested that yet. And then we had our PMI data out. PPI, PMI? Can't even remember. PMI. That came out right here. Saw a nice move right back up to the weekly expected move. We came down and we traded around that. We pinched between these two anchor volume weighted average prices. Now we're just floating around the weekly expected move. So not much price action, honestly. And as far as the market net flow goes, there's really no edge here either. At all. Looks like a bunch of chop, okay? As far as the zero date levels, we had a few. We had 5100, 5150, and 5200. That was at the start of the day, and that still remains kind of those key levels, and we're floating roughly at around 5200. This was 5150, and this was 5100 right down there. So when I look at this, we zoom out, all we're doing is seeing a little bit of a bounce right here in the midst of a pretty significant downtrend, and we're well above below the gamma flip line, which is at 5500 now. $5,300 is the current put wall for the SPX. All right, give me a second here. I'm going to read the things. We'll pull up individual names here too. For me currently, I'm just kind of watching things play out. I didn't really have much invested in anything, so I'm taking it pretty calm today in the heat of all of this. I'm not one to really just make a quick decision in the heat of all of the mayhem. Okay. So once again, just to repeat, we're below a declining 5-day moving average still. So the pressure is still to the downside. Obviously, the trend is still down, right? We tried to get it fixed up a little bit over in here. Is this the right one? Right, where it started to flatten out, a little neutralize a little bit. Didn't hold, cracked back down. It is what it is. And we're still, while we were doing this, it was still in negative gamma territory. We came above it for a quick second on one of the trading days, but quickly there reverted. So the expected moves for just today's trading session were rather large. We covered that in the last little brief there. The VIX term structure went into backwardation, telling us that, hey, the problems are here and now, more so than what we're looking out in September. We'll close that. And then we talked quickly about the probabilities of a rate cut have increased. Now we're looking at a 50 basis rate cut, right, in September versus the 25 basis point rate cut. And we're kind of in that blackout period with the Fed. And you have to just wonder what happens if the Fed comes out and does an emergency rate cut in the midst of this. I personally just don't think that would obviously be a good sign for the market. Like everyone's like, yeah, rate cuts are coming. I'm so excited, right? Typically, as we've seen in the past, and we've showed many times on the show, like, it's not really that great when you start cutting rates. And then if the Fed cuts rates unexpectedly, you would begin to wonder whether or not the market sees that actually as good news versus bad news, because I would imagine if these come in and do an emergency rate cut, people would be like, oh, there's something actually wrong here. Something is actually wrong. And then maybe if it goes a little bit more in just deeper and deeper, and that's where you got to really wonder is like they've been trying to fight inflation here, right? The Fed has been trying to fight inflation. If you cut too aggressively and you start adding liquidity back into the system, inflation takes back off again, which is just not what they've been going for. So still rock in a hard place. I don't think that they're going to do emergency rate cut. I just don't see that. But then again, man, there's a lot of things that you just, I think the easiest thing to say right now is like if people are going to act very confident, like they know what's going to happen, but I just honestly don't think many people or anyone really knows what's going on and what just happened just the other night. I know we can look towards Japan. I know we can look towards that and see that, but right now, I don't think anybody cares about that here. I think it's all focused on volatility because that was a wicked move. I mean, here, let's take a look at it. Watch. Let's go back, max. Let's go back. That's 10 years. I mean, that's plenty. I mean, there's probably different calculations with obviously going back this far, but I mean, we came up to 65. Like, this is a legendary move in the VIX, right? There's something new that happens in this market every day. It's wild, just wild. So I don't know. Hopefully, a lot of the market briefs and stuff kind of kept you like on the right side of understanding when volatility could arise, being under that gamma flip line, being under the declining 5-day moving average, and understanding that like we were walking into a potential mess during a yield curve uninverting, and the Fed, coming to cut these rates. So I don't know. I think that's not the time to panic. I think it's more the time to just prepare and be ready for opportunities to come. Overall, I think that the market's holding up rather well right here, though. If we look at the 11 sectors that make up the S&P 500, we'll look at a couple extras. XLRE, XLU are kind of holding up rather well. Utilities, right? No surprise there. These are, more rate sensitive type names. If we look at stuff like TLT, TLT, it's off the highs of the trading session, but we saw a pretty nice big move there. The 10-year yield off the lows of the trading session, right? That's a pretty significant move there in a short period of time. Can we expect a small bounce? Yeah, we can definitely expect a bounce. I mean, that's the thing about volatility. You can expect exactly that. Bounces, fades, wild swings, right? And we call this out over here when IWM was like breaking out, right? When it was kept on moving up, the biggest concern for me was like, why is implied volatility rising with this? It didn't really make all too much sense for me. And that was like, it was rising high. And now like, look at, this thing is flying still. Flying. Let's go to the trade tab. Like, watch, look out tomorrow. Tomorrow is pricing in a $5 expected move for IWM. People, that's the largest daily expected move I've seen for IWM. Albeit they haven't, it's just recently where they started trading daily contracts, but that's the largest I've seen since they started doing it. I thought 3 was crazy. That's crazy. You go out to the end of the week and it's $8.35. That's bigger than the Qs sometimes. This is some wild, crazy moves. So yeah, I think that we can definitely get rip your face off rallies, which we're kind of getting right here, right? We're trying to still kind of get above this little spot right here on ES. Somebody had asked me earlier, would I short here? Nah, I wouldn't short. I probably wouldn't I just wouldn't do much. If anything, I'd be looking to add into longer term portfolios and just put a little bit here, a little bit there. And that's about it. If you didn't manage to watch last night's quick little brief, I talk about volatility adjusting and how when I looked at the VIX, right, how you can look at this is if you're used to trading down here at 10, I'm gonna round it, right? If you're used to trading a 10K portfolio or just a 100K portfolio down here at 10, and now it's up to 60, right? Your 100K portfolio is now moving back and forth, 5x or whatever, right? Or say if it goes from 10 to 20, right? Now your 100K portfolio is moving daily swings as if it was a $200,000, dollar portfolio. So you don't need to, put in large amounts to be able to make these similar moves. That's what volatility adjusting is. So I don't know if I showed you a picture of my portfolio right here. Like that's what I did. I just volatility kind of adjusted it. So here it is. I'll show you. All right. Today, I mean, I have SPY, so it'll go down a little bit today, but I'll show you where it was at. It won't go down much, but because I didn't have that big of a position. But let me make sure. There it goes, starting to break. But yeah, here it is. All right. What's going on here? Right. I've just been kind of standstill in all of this. Just floating around. Haven't been really able to do much. While we're in higher volatility, it's harder, first off, for swing traders, you get a lot more volatile swings back and forth, and that's just kind of how it's been. So yeah, when things are in negative gamma territory, things get a little bit more crazier. Swing trading doesn't work as good. But the moment that things change and the market conditions change, things typically tend to perk up. So when I'm looking at these large moves, these are the areas where I'd look to probably fade, right? So big moves to the downside, potentially look to buy a little bit in and see if we can get a big move back up to the upside. And another reason why I'm saying that is because if we actually look at, I'll show you right here. I'm going to pull it. I'm going to just go, we'll go a line chart. No, it doesn't even matter what chart. I'm just going to show you what I mean. RSI, I don't need that. I'm going to show you what a rate of change when in the midst of volatility, right? You get, I don't need a MACD. I don't need all this stuff. No. And by the way, you can drop some names in the chat and we'll go over those here momentarily. I'm just kind of walking through the markets and yeah, that gap definitely filled, by the way, in the one that was hiding way up at 45, that filled. It's been 4 years. 4 years and it filled. It's been a long 4 years. Okay. Yeah, there's a lot of platforms that are down. I was having problems with Fidelity earlier. That they resolved it fairly quickly though. Would have sucked if I had some crazier positions on, but I did not, luckily. Okay, give me a second here. I'm just trying to go I'm gonna go 25 years. I'm gonna just do 25 years. Okay. I'm gonna do a solid line to make this simpler. I'm actually go 1280, 720, make it look a little bit cleaner. Solid line thin. Okay. Okay. So, okay, what we're looking at here really quick. So I want to just show you what I mean by people are like, can we bounce? Yeah, absolutely, right? In the midst of volatility, so this is the rate of change down here. So this little indicator down here is rate of change. I'm only doing 1 day rate of change. So when this spikes up here, that's saying, hey, we had a 15% up day, right? That's 15%. When it spikes way down here, it's, hey, we're down 10% in a trading session or whatever the case is, okay? That is what and then what I want to call out here is, let me just hide myself. Okay. What I want to call out here is in the midst where we see clusters of larger down days, you see right next to it clusters of larger up days. So you typically see in the midst of the 2008 financial crisis, what do you see? You see all of a sudden rates of change higher to the upside and rates of change higher to the downside. What about over here in the pandemic? Rates of change higher to the upside, rates of change higher to the downside. What about 2022? Rates of change exceeded to the upside and to the downside. So in the midst of volatility, right, even here, down over here, how's the .com bust? You see what? Volatility to the upside grows, volatility to the downside grows. It's these areas, these little pockets that all of a sudden you get small up days, right? When volatility is lower. So I'm pointing this out because that's what we're moving into higher volatile environment as it stands in this current moment. I don't know if it's going to stay this way, but that's where we are right now. So yeah, we're going to see higher up days. We're going to see higher down days. And that's just how volatility works. Okay. When do I go on vacation again? Shit. Let me, let's pulled up some of these names that everyone's talking about. Look here at the market really quick. S&P 500 is just doodling around its weekly expected move. It's down 2.35% on the trading session as it stands right now. Nice stuff, JJ. All right, I'm gonna look through some of these chats here. Yeah, we'll find out. We'll find out what happened. I'm sure there'll be more information about it as time rolls out, or speculation and stuff like that. My best guess it has to do something with volatility. I get the stuff that's happening overseas, but and that plays a role. But yeah, the volatility move, something happened there. That's no joke. That's not fair, raid. All right, let's pull up some of these names. If you want to put some into the chat, we'll pull some up. Let me, I'm checking both chats here really quick. Give me a moment. Gamma flip line for SPX is at 5,500. What's up, Moonraker? So we got Twist, Mara. Tom Lee's price prediction for IWM is 300. What is IWM at? When is his price prediction for 300, dude? That's crazy. That's like just basically saying, yeah, it'll probably hit it in some time in my life, right? Like, is he saying like this month? That's wild. 100 points higher from where it's currently at. Wasn't his price prediction for August like 15%? Not the greatest start. I just wish that they would explain where they're creating these like targets. Like it almost just feels like some of these targets are just like just thrown out there just for like a news headline, like I'm the biggest bull or I'm the biggest bear. It's like never somebody that's just like super level headed. Unless if I just don't see them on. No, days like this don't necessarily negate the expected moves. I think it's still important to note them, but in the throes of volatility like this, like your trading strategy, that whatever you might use with them, probably needs to be adjusted a bit, and you got to respect the volatility. Did I throw my screen somewhere? My bad, people. Messed up that. Your 401k is getting unburdened from what has been. What can be unburdened by what has been, you know? That's pretty funny. All right, so we're gonna pull up these. Amazon, we got Nike, Mickey D's. Yeah. S&P 500 is making a pretty decent recovery here, people. I'm just on a 2-minute time frame. Sorry, that's not the 5-day moving average. That's why it looked all weird to me. Give me a second here. I'm gonna put back up the 15-minute time frame. There's the 5-day moving average is up there. I was on the 2-minute time frame. My bad. That's what I use the anchor volume weighted average price on. My apologies. Still below it though. You're welcome. Moonraker, dude. Apple. All right, I'll pull up Apple. If you want me to pull up a certain name, just make sure you drop it in the chat, and I'll get to them. I just want to take a quick look here at VIX futures too. If anything changes, it's just okay. It's coming off a little bit. That's good to see. It was looking pretty frothy over here, and it's come off a little bit. So that's definitely helping out with this little run here. Let's see here. This is the active contract. We're at 27.69. If you go out to September, 21.80. So we're clearly still in backwardation. And vol is coming off a bit here. And I will note too, typically in and around this area, right, if we go back month versus front month volatility, you do typically find the market try to stabilize when you have these pretty aggressive, yeah, that's crazy. Yeah. That's the lowest I've seen it, I think, since I've been tracking this. Holy hell. That's wild. Give me a second here. I'm trying to go back further to see like when was it like this? Okay, it happened to be in, oh man. Okay, so March. Okay, so in 2022, and I still think that this is a valid thing to look at. So 2022. What is this? Come on now. What's going on here? Okay. So this is back month versus front month volatility. And obviously this thing just flattened like a pancake out here today. We're down at 0.87. So back month versus front month, seeing a huge fall off a cliff. And usually when we get down to this one area, and it was all throughout 2022, this worked very well. When you get back down into this one area, it's a pretty aggressive move. And this is where you can see the market started to kind of like chop around, but eventually kind of catch its footing a little bit in those areas, okay, when we hit this. And then when we hit these high readings at about 1.2, which is basically just telling you back month is 20% higher than front month, you found topping points, and things could settle down a little bit. And what we're seeing here is obviously, I don't know where it's going to end, but this is a pretty big spike to the downside. You look to the left of the screen, we haven't really been here since 2020, which was the pandemic, right? And this thing came down to like 0.75 on that extreme. And VIX obviously fired off like a machine up there at around 82. So this is extreme. These are high levels. And you can see that that's when we saw massive up days, massive down days, and so forth. And that's actually the last time we saw circuit breakers, which we came darn close to seeing a circuit breaker today. Pretty darn close. Never know, dude. The day's not over. You never know. The day not over. Give me a moment here. Okay. Yeah, so we're seeing a nice little bounce, but I know you can look at this at various time frames, and people are gonna say, well, it's just flagging, right? It's just a bear flag. They could be right. We'd see this thing rip right back up and come right back down. Also could be right. That's why I'm just kind of at a standstill today. I'm not really interested in catching these low dips, but we'll pull up various names here because there's obviously going to be some blood in the street. So let's pull up some of these names that people have mentioned. We'll start with the larger market cap names. So Apple. Give me a second here. Apple was down like way down to 196, and now it's up to 210. That's such a large move from these lows. Bam, 7% just intraday. Wild. Okay, so if I go to the daily time frame, where do we come to? We came back to a back test, and we're seeing a little bit of a strong move right back in around this area where we saw another prior strong move. yeah, I not interested in buying that. Maybe if I was ready for it down here, that would be one of those small little kind of approaches to it. But yeah, Microsoft. I mean, look at this. This, who knows what this can end up looking like, but we're seeing that obviously big move from 468 down here. That's minus 17% in a short period of time, but we also saw it rip here. So really we're just coming back to like, oh heavens, you know, we're back to where we were at the start of May. Now overall, if this drops a little bit further, it put us right back into like territory where we're flat on the year. And you could look at this and be like, dude, it could be a very large topping pattern. Like imagine if it just like bounced from here, right? If we bounce like this and then started coming back down, people are going to start calling it some massive, you know, head and shoulders topping pattern for Microsoft. NVIDIA. Down here to around 90 on the open and seeing a nice bounce. I mean, this thing is only down 6%. This thing was down significantly more for the trading session, right? It was down like 15% on the day. And this one obviously holds one of the higher implied volatilities. Now this did meet its measured move for that kind of head and shoulder, or that double top, right? The double top from this high to the neckline, boom, to right here. So that came into that measured move there for NVIDIA, came to fill that gap, and it really just came to backtest this prior area. Earnings still is around the corner here too for NVIDIA. We'll look at Google. Came down to roughly around that 200-day moving average to fill this gap. Give me a second here. Let me fix this. Just do 2 years. Okay. And we've seen a bounce there from this early morning trading session. I want to remind everyone too, so this day right here, like this is where I had buddies calling me like, so on this day on NVIDIA, they're like, dude, what should I be buying this dip? And I said, I'd be more interested if it filled that gap at around 95. And then the next day it opened up and it was up 12%. And they're like, dude, come on, man. I should have got it. I'm like, I don't know. I'm like, it's pretty volatile now. And now it's like way down here. And now they're, you know, afraid to buy it even when it was even lower. And that's the thing what volatility does. That's why you got to do smaller positions, because you don't want to have to trip and worry about it. You don't need a huge position to make up for this type of stuff. And by the way, if all this stuff goes positive in the next couple of days, that's still a good trade, right? Meta's down 2%. Amazon's down 4%. Actually, it's down a lot more since earnings, right? The earnings, from my understanding, weren't even that bad. I thought they were good. I'd have to relook into it. But yeah, big, huge crush there in Amazon. Down to 151. Jeez. Holy moly, people. All right, let's take a look at Meta. Meta's holding up rather well. A lot of these are all holding up rather well, to be quite honest. Okay. Somebody had mentioned Nike. Nike hit a new 52-week low today. Almost coming down into that little range down here that I was more interested in. You can see it's kind of a wedging here still. It might expand to the downside, but Nike, I mean, gosh, it's just so hard to say, like, when the Fed starts actually cutting rates, how is this market going to respond to all of it? And that is and everyone is, to me, it just seems like everyone is so bowled up. But I feel like this was pretty easy to spot that we were going to see some downside. McDonald's holding up rather well after its earnings, just consolidating up here. I would like to see this kind of go consolidate a little bit more. Somebody had mentioned Mara. I would imagine Bitcoin stuff is getting cracked pretty hard because Ethereum was down like 20%, Bitcoin was down. That's what happens in these, like, people reach for liquidity. I mean, of course they're going to reach for Bitcoin. There's typically tight correlations there. I mean, I would imagine, let me see, gold. Yeah, it's down 1%. It's like, how is gold not up, right? Especially, like, what's the dollar doing? Dollar's down, gold's down. It's like, this is complete a liquidity grab. Like, they're reaching everywhere right now. Yeah, to act as if you really know what's going to happen next. Honestly, I would not praise anybody that calls out like, hey, this is what's going to happen, and they end up being right. The reason why I wouldn't praise that is because if they do that time and time again in the midst of volatility, they're going to get it wrong one time, and it's going to wreck everything for them, especially if they put on crazy sizes. Now, if they say like, oh yeah, I think this is what's going to happen, so I'm going to create a trade that makes sense, and here's my stop loss. Okay, that's something different. But when you act overly confident in this environment, and you get something right, yeah, do that over the course of 20 years, because you're going to be wrong in the midst of volatility too. Okay, S&P 500 is just kind of wavering right now. We did feel that liquidity, but then it looked like there was some added right above us, not much. And then we still have that 3,900 contracts. I'm gonna see if market net flow changed at all. No, not really. And then we're floating around that 5,200, slightly above it there on the Awanda chart. Let me see if I can just pull up SPX by CBOE. And yeah, we're right there at 5,200. It's pretty lined up. Even somebody might call this a potential head and shoulders top if this starts like, oops. Right, if it goes out like that or whatever. I'm more of a fan of like more of a horizontal, but I mean, I could see that the case if it bounces up, like comes way back up to 5,500 or something like that, and then it looks like this. I mean, I know for a fact everyone's going to call this out for a head and shoulders, right? And then they would be measuring the moves like this, right? It's going to, 4,500 is the target, or this gap fill, or whatever the case is. And they honestly might be right. Yeah, we'll take a look at oil. Yeah, this would be the economy slowing type of look, and honestly, it doesn't look like it's actually struggling all too bad right here. So we're down, what, 60 basis points? It came off a pretty big fade in the last 3 trading sessions, so we'll see how this kind of resolves itself, but I'd kind of agree with that oil is not really signaling too much fear right here. But in the last 3 trading days, if you take that into consideration, it was pretty significant. And I haven't looked at the chart, but what about like yen price in oil, or oil price in yen? That chart could be one of the reasons why we're seeing what we're seeing out there in Japan. Like dude, this is nuts. I'm pretty sure this was the largest down day, or the largest 2 down days, in history for the Nikkei. And this is a blowout move in the Japanese yen futures. That's wild. Holy moly, man. Even look at semiconductors right here. Imagine we bounce up like this, like how many, and then it comes back in a little bit. People are going to start calling us out for our potential head and shoulders, right? Everyone's going to say it. Everyone's going to call it out. Look at implied volatility here. Implied volatility is super high. Just doesn't make me feel good looking at that. Un momento. Okay. Alrighty. So we're just floating really roughly at that weekly expected move for the S&P 500 still. Back and forth here on the Bookmap. Not much price action during the day other than the, rip right out of the gate pretty much for a lot of the heavy tech names. I want to look at XLE, energy. I do find it interesting here how energy took a big old hit today. mean, this was down pretty significantly, and oil's like hardly down. So that to me is a little interesting here. And energy now is at the highs of the trading session. So this one's catching quite a bid. Even financials, like take a look at financials. I mean, we're down 2%, right? It's a decent move, but really, I mean, if you just look at this chart, and I showed you this chart, that's nothing. We're back to where we were, you know, in July. So honestly, financials is even holding up rather well, and I think it's really important to keep an eye on these banks, given the fact if we are going to have more type of damage, and this to me doesn't seem like much. Yeah, right now at least, you know. Let's see here if market net flow is giving us any updates. No. Gamma Labs, we'll check a look here quickly at 0 date, see if anything's reaching out here a little bit more. A little bit actually, 52.75. Yeah, maybe. So if we're gonna get continued move up to the upside, I'd be watching that 52.75 level up here. 52.50, 52.75, right in here. If you're playing a bounce or something like that. I'll draw a little box in there. Can reach up there. And then 5,200 is still the put wall for the trading session. I don't have a free Discord, Snowman. Not at the moment. Okay, let's see here. I do have, it's not a free Discord, but I do have a free Patreon thing where I post some of the midday updates in there, and that's where it's at currently right now. Do I expect NVIDIA to reclaim 3 trillion? I mean, we're not that far off of it, so I think it's always in the cards, but I mean, where did that really kind of be, right? Right up in this range, back to 3 trillion probably. We're at what, 2.4 right now? Basically 2.5 trillion. I mean, shoot, like sometimes this could just be a single day and we'll be right up there again, you know? And who knows, like earnings is around the corner. If the market likes what it sees on earnings, yeah, it could be right back up there. I mean, just take a look. Like, look at the expected moves for going into earnings. Not even, let's just look right now where we're at. Where it's like at a $10 expected move in the next 4 days. Go out a little bit further, go to the 11 days out, and we're looking at a $14 expected move. A $14 expected move would put us right back up into this range, so that's very possible. The gamma flip line, Matt, is for S&P 500 is 5,500 right now. Yeah. Pew, 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 pew. Boop, 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 boop. Holding up rather well still. I'd like to see this start to turn green and these start to kind of like elevate a little bit, like the green line start to pull up, the red line continue to go down. But being that we are a positive divergence, both below zero, there's no convergence. There's really no edge here on market net flow today as it stands right now. 522, I think, okay, so if we look at this level specifically on the 0 date on SPY, 522, that is roughly right over here. It's not too far off. That could repel price. So you'd want to get above 522 and hold. right now that could be acting as a level of potential resistance, according to just that quick 0-day chart. K-Web. Yeah, we can take a look at K-Web. China stocks, K-Web's up 50 basis points on the trading session, or 40 basis points on the trading session. Let's take a look at BABA. BABA's making a pretty significant bid back. Pinduoduo is one that I was interested in. Where's this at? Hasn't even really moved. What JD's been up to. Gosh, man, these implied volatility and everything is crazy. XBI made a big comeback after its kind of recent sell-off, just from the lows of today's trading session. The only thing that really hasn't made a big move back is things like Ethereum and Bitcoin. I mean, I guess they made a decent move back, but still, those are some pretty huge moves to the downside. I guess those are the futures, so they open up a little bit differently, but yeah. This seems drastic to have such a Pinduoduo. It's typical to have these dramatic moves and for it to consolidate and kind of ease up a little bit, and that's kind of what we're seeing. I think we had obviously a little bit of a bid back, but it's not too crazy in the midst of this volatility, and we really haven't seen it consolidate too much till recently, I guess, if you're just looking at these 15-minute candles. But still, it's kind of been a one-way ticket up higher, recouping some of this stuff, bringing hope back in. It's, you know, new downtrends, they don't go down with a fight. So you're gonna see this type of stuff. We'll see if it actually has legs, if it's actually going to turn into something bigger. I think that there's always that possibility. I think I think it'll change when we start to see volatility come in a little bit, and when we can actually see ourselves back into positive gamma territory, which we're just not near. We're not near at all. So I don't know. In my opinion, when I look at this chart, this looks like just a quick little move to the upside. If people were short, they could be covering. It could be people that are trying to buy the dip, and buy the dippers, man. They might not have their diamond hands ready. They might just be trying to play a quick bounce and trade it. And we haven't actually seen this come off yet and what it would look like. And volatility is still rather high. So yeah, I'd be looking up at this range right over here and then seeing what the market does after that. I want to take a quick look at VIX futures again, see if anything's kind of chilled out there a little bit more. No, it's actually kind of perking itself back up here a little bit. Oops. Yeah, like I'm not a huge fan of this, the look of this. Like, look at IWM. Like, this is its comeback. It's basically a straight line up. We haven't seen what a digestion looks like yet. Not my favorite look. It's crazy to think too that we're down still 2% in the Qs, but we were down way more. Like, holy moly, 5.63%. So we're paired half that loss. Crazy. Crazy, crazy, crazy. Is Nvidia going back down again? I mean, I'm not interested in shorting it. I mean, it looks like it could very well. I mean, just looking at implied volatility, but I'm not interested really in shorting it, and I'm not interested in establishing long positions right here. Volatility, man. I try to avoid volatility as much as I can. And when I am going to be getting into it, like I want it to be playing in my direction. I don't like starting a new position in the midst of a lot of volatility. Got an NVIDIA at 92. Cool, cool. Okay. Yeah, TLT is down on the day now. LMT. Yeah, there's a pretty big pop in LMT. Let's take a look where it's at now. Yeah, there's a big move in LMT. Any defense names, people would look at this and be like, yeah, there's a war coming. That was a big move. Just all this stuff combined, man. You see this big moves in you see oil coming off for the last couple of days. Gold is at all-time highs. The dollar, right, coming off. Wow. Gold is down. And then the 10-year yield, I mean, look at bond volatility must be picking up quite a bit. But yeah, take a look at the 10-year yield too. This thing paired a lot of its losses from the early morning session. But man, this was a new low for the year, down to like 3.6. So yeah, why is it bouncing? I don't know, because it sold off so hard. You know, that's the only thing that I'd look at. That'd be my only bet. I'm not joking when I say that the volatility is still alive and well here. Once again, I'll pull up SPX, go to the trade tab, just look out to the end of the week. It's okay. So the original expected move was like 140 for the SPX. And then I was like pulling it again. I'm like, holy cow, now it's at like 200, 220. Now it's at 160 right now. Volatility doesn't come off. Not at all. So, I mean, and that's the thing. We can literally be like, we could be right back up to 5,400 on SPX tomorrow. Like, easy. Boom. But on the same note, we can be right back down to the lows of this trading session. And it could flip everyone out. Where we can go up higher and people are like, see, I told you to buy the dip, and then it comes right back in. That's just what it is. So I personally I don't like being involved when it looks like this. I would prefer things to just come off, calm down, and then I would approach it. It's just what it is. That's on my swing trading accounts. Like if I'm like the longer term stuff, yeah, I don't mind buying like. Anytime you see a 10% pullback on, the Qs could be worth it, to add a little bit more into it. This was on the SPY. How much of a pullback was that there? Probably 5-7%-ish. Almost 10%. So yeah, you get a 10% correction in the S&P 500. It's always worth considering, if you're for holding longer term. All right, let's take a look quickly here. We're not quite at that little level here that we kind of called out, but we're not too far off. It looks like we're going to come for that. California. Oh, QCN. Take a quick look here at the Bookmap. Pulling into some of these contracts overhead here. We'll see I mean, it looks like it's about to fill. 52.70, kind of right around there. Yeah, 52.75 would be the level to watch here. We got above that 52 or 522 right here, or we're kind of just right at it on the SPY. Let me see if anything changed there. Not really, not really. So we're floating at 522. So you want to hold above 522. If you don't, it can kind of repel us right back down. For those that don't know, I was talking about shorting miners a while ago. I got out another 50% of that position today. That was when we talked about on I don't even know when it was. We showed a chart of silver, we showed a chart of the miners, and we kind of broke that down of why I thought it would be a good idea to actually short the miners. And that was pretty much fading everybody, saying that the miners looked like they were set up and they looked good, which they did look good, but there was a pretty big divergence, and there's also a very strong correlation. I'll show you the chart really quick. But I got out of that trade. I got out another 50% of that trade today. So I'm up to like 25% on that position. I don't really talk about shorting too frequently because I prefer just to be long, to be honest, and then go in more cash. Sometimes I'll short. Every once in a while I'll get a little bit more tactical short on, but all right, looks like we're coming up into this area here. Still feel like we're gonna come fill it, so we'll see what it does right in around here. Yeah, so here's the chart of basically silver's up top, gold miners, GDX is down below, but you'll see that it's basically a correlated state. It's always in positive, right? And what I noticed was sometimes when silver doesn't put in these newer highs and gold miners do, you have a strong correlation. It could be insight to a potentially like a move down in miners. And I looked at like the bullish percent index. So we got short roughly at around this area. I don't know if I added, or I think I was just short around this area. And then I got out 50% on this drop and a 50% on this drop. A little bit after the open because my Fidelity account was locked and I did it from Fidelity. So I got it a little bit late, but it's a big move. And I used DUST. So it was it wasn't shorting GDX, it was just buying DUST. But I know some people followed that. All right. Amazon's still down 4% on the trading session. NVIDIA getting hung up a little bit here at that around this 102. But if I'm looking at this from just a technical standpoint, I mean, it's off the lows significantly, but you have this drop at around 102, right? It comes back up. It's a little bit less of a drop, and it's kind of getting right back into this level. So if we're going to tighten up here, which it is tightening up, a pop from 102 can be actually pretty significant. I mean, just a measured move of that could be, That would be pretty wild, but a measured move could take us up to 107, 106 and some change, which would be crazy. That would literally bring us to almost positive on the trading session. I don't know if that's going to be the case here, but that's pretty wild. Coming into that liquidity right now. All right, we're almost pulling into this area. Pretty much a straight shot up there. I saw a little bit of volatility intraday there, but we're pulling up into a level that does seem significant from a gamma perspective. $52.75, right up in here. A little bit more. Can I comment on oil going long, or going oil long into war news? Comment on also how to approach bonds. I can. I have a chart that really shows a good example of that. Give it a second here while we're trying to fill this liquidity, and I could pull it up. So, for example, on bonds, NVIDIA is trying to break this little area right here, by the way. We'll see if it can actually hold or not. I'd imagine a little bit more volatility to pick up here. So, for example, on bonds, so if I look at something like TLT, this was a pretty substantial breakout here. So I would wait for things to obviously calm down a little bit and to tighten up, and I'll just play it from a technical standpoint again. This seemed like a duck and cover, getting out of the way, something big. So the bonds kind of, in my opinion, it looked like the bond market knew that something was taking place, and that's why we saw not only like TLT, but you can look at like, I don't know, ZB, right? These things fired off, and they fired off fairly quickly. So it almost seemed like they knew. So I would see if how these consolidate, how they wind down a little bit, and then go from that standpoint. Do I think it's a brand new bull market in bonds? I don't know. But I will say, if you just date back, like go on a weekly time frame, that move right there, look back. I mean, this is a very gigantic move, and you can see things got very tight. We saw it move out. So it's going to be interesting to see how this consolidates, and if we can continue a potential uptrend here in bonds. And if that is the case, obviously, most likely yields would pause out, come down. We'll see from where, but right now you can see as TLT is kind of rising, or sorry, falling, you have the 10-year yield coming back a little bit here. Just, oh my gosh, I wish I had the move index in front of me right now. I don't. But the range of these candles are just on a 10-year yield. This is like watch out territory. As far as like the oil stuff goes, it's things that have happened in the past where you get these rapid rises in the rate of change of oil has led to some big market crashes. I have the chart. I can't remember where it's at. I'd have to pull it up later. But yeah, if we start to see it come off a little bit and continue to come off as far as oil goes, I think that'd be signaling more of like an economic recession. And as far as the war stuff goes, I'm not really a geopolitical expert. I can give maybe some comments here and there, but I would stick more to, I'm sticking more to just the intermarket aspect of things, and then going from there. And in the midst of volatility, I revert back to everything that I usually say is like, yeah, I just watch out, because no one really actually knows what's going to be happening next in the midst of it, and we don't know what kind of policies are going to be adapted or changed. And many times when you start to see this stuff happen, it's like signals ahead of time. Like why was gold at all-time highs? If the economy and everything's doing so great, why would there be a move into gold, right? What's happening there? So there's signals kind of all across the board to watch out for. And we're seeing things play out right now. And we don't know if it's just a little blip on the radar or if it's actually leading into something more significant. What tells me that it could be more significant, that's different from every other time, is volatility, right? Like that was a huge move in volatility. So my guess is that we'll probably hear very shortly that somebody blew the heck up. Like, yeah, it's coming off here, but it's still, I mean, we're still in the 30s. Like, but this right here, like, what the heck, dude? Like, that is nuts. That is crazy. So, yeah, somebody, some firm, some fund, something just, they imploded. Right? I mean, I don't know how else to read that. Like, somebody completely blew up with that move. All right, so the S&P 500 is still kind of making it through that little level. We're almost there at that 52.75, coming into that range. Kind of made sense, you know. We're holding that 52, so that's good. That means price can repel from that, pushing it up, so that's a positive sign there. And we're not too even far off, back up to the daily expected move. Nice recovery. Down 1.76% on the trading session for the S&P 500. Talk about a recovery. Still haven't seen this consolidate at all. And then while this is taking place too, if we take a look at SPX, or we'll just look at SPY actually. God, yeah, volatility is still like roaring its ugly face. We'll pull back up NVIDIA, see if that made a move and is helping out with that little pop. Yeah, nice little pop there. Right. We'll see if it comes back in, but that right there was a 1.3% move, just that little breakout right there. I don't know if it's going to continue or whatever, but I mean, nice little move there. And now we're pulling into, let's see here if anything's changing from this perspective on 0 date. Not much, so I'm just keeping an eye on that 52.75. This kind of zone in here. I guess this should have been red, but don't matter. Semiconductors just went green. Could be a big bear trap, or it's, I mean, we haven't seen the move consolidate, people. Like, was this all a big bear trap? I mean, we haven't seen anything consolidate, and volatility hasn't came off yet at all. So the same people said this. I mean, so everybody said this about NVIDIA just the other day. Like, they said from here, this move, and it gapped up here, and that was up 12% on the day. Okay, almost 13% move in NVIDIA. Everyone called that a bear trap. And then all of a sudden, a few days later, we're at $90. You know? So yeah, it could be a bear trap. But that right there was probably a bull trap. So it's, and did volatility come off? Nah. Volatility did not come off. We're still in negative gamma territory too, by a large shot. I'm interested now to see like our CTAs. This isn't updated yet, but we'll see. Yeah, so look, so we were up here in July, mid-July, and obviously we started hitting some CTA triggers and they started selling into selling. So we've seen a pretty big move, you know, to neutralize itself a little bit more, but it's not like extreme by any means. So if we start hitting more various triggers, maybe what would be a trigger? Probably looking at like maybe 5,200. Yeah, maybe 5,100, 5,200. This around this range could trigger some more obviously selling, and then I would say the big focus would be that 5,000. That big round number. down here. If that was really going to be the case. But yeah, I mean, I'm looking at this right now. Like, let's zoom out on this 15-minute time frame. I mean, does this look like good? Does this recovery look like amazing? In my opinion, no. It doesn't look good. It literally looks like it just saw a huge move to the downside and we're seeing a little bit of a bounce. But I will say, I am quite shocked at how well everything's holding up in the middle of pretty much a full-blown correlation. So far, at least. Bear dips don't last. Maybe. I'll remind everyone too that on like a lot of these charts, we saw the topping patterns on like weekly candles. Doesn't always play out this way, but this was this 3-bar candle over here was pretty clearly obvious that it could mark a top for a while in the Qs. We ended up having follow through. It did validate it. They call this evening star reversal. And that was a pretty significant move. So even if we bounce up, like, what if it goes like this for weeks? Like, we don't know. That could mark the top for quite some time. With volatility where it's at, we can be at all-time highs in a couple of days if it stays this way. But yeah, I don't know. Brokers, brokers. There are a lot of brokers today. The brokerage firms, they having issues. All this volatility. We're seeing pretty wild moves, not only here, but everywhere else. I don't know. In my opinion today is if you can find calmness in the middle of all of this, I think you'll be doing a lot better than trying to nail everything down in the middle of volatility. You'll have winners and you'll have some significant losers if that's the case. And I'd rather just kind of be middle of the road. I'd rather have my portfolio flatline go like this. Well, correlation can lead to capitulation. You're saying correlation or capitulation. I don't necessarily know if that was capitulation. I think that there's always the possibility of that because if you look at like the Market Watch tab and you go into the index, right? A capitulation, if you have a capitulation, you look for this correlation. You see what I'm saying? Like if you want a full-blown capitulation event, like that's not what we've had. If anything, it would be today. Right? Or it would look like this, where you'd have all stocks in the S&P 100 that are basically down. You have nowhere to, hide. Everything's getting hit. That is what capitulation looks like. But it's also correlated, right? Everything's correlated right here too. So yes, exactly. Getting a little bit of sell side here. Nothing too crazy. As after we filled that upside liquidity, you see that we grabbed it, saw volume come in for it. It's taking a little bit of a breather here. Still, we have like 4,000 contracts up here at 53.30. So I don't know. Seeing it come in a little bit here. I mean, every single 30-minute candle for the day so far has been basically green. Yeah, that's a good point, Sweet. It might be capitulation with the VIX that high, but I don't necessarily count on that. And the reason why is because volatility hasn't really came off. So if we're in a regime where volatility is going to trend higher, like say for example, okay, the market goes up, like say if it goes back up to like, we'll go to the SPY for this purpose of just to show you what I mean. So say if the SPY, it's down here and we come back up to 540, okay, cool. Yeah, see, and then what happens if the VIX doesn't actually come off? What if the VIX still remains in high 20s? That's to me is not capitulation. That's still a pretty high VIX. And what if it's still in backwardation at that point? That just tells me that the market's opened up for more risk. So when that's the case, right? I mean, you got to understand, like, is this capitulation? Is it like, this is honestly, if the market's really going to go through something big, 10% is nothing. 10% is nothing, especially after we just went from April 19th to like, to where we were here at the middle of July. So you're going to see this kind of these rocks back and forth. And you gotta realize that in the midst of volatility, right? Oops. Like this is like, we thought we were taking the elevator up. Like, look at this. Like these were the stairs now. Now you can really see what it looks like when we get volatility to the downside. So yeah, confidence level for me, my confidence as far as being able to hold my portfolio together is high, but confidence as far as like executing and putting a lot more money at stake, not that high. Because I don't think that there's anybody that really knows exactly what's going on right now or what's going to be the next move. I think it's very easy to say, yeah, after a big move like this, we're going to bounce. I think that's pretty easy to say and probably correct. But also, once again, we'll just go into volatility and say, okay, well, implied volatility is still ridiculous. And this is where everyone loses their minds. Just is what it is. It takes you 5 seconds to go into Twitter or X or whatever, and you can see that. You got people, way more drama. You have people like taking shots at one another. Do it this way, my way, this way, that way. And yet nobody actually knows what's going to happen next, but then they act like everything is, they know the next move. Just watch out. I have one goal here in the middle of volatility, and that's to protect my capital. That's the main goal. I know that most people think about like, okay, what can I make? But that's the problem. When you think about what you can make, you look for an opportunity. And let me tell you what, if you're looking for the opportunity, you're going to find one. Whether it's good or bad, you're going to find one. You're going to take it. Sometimes just sitting on your hands, even if this thing rips right back up, I personally I just don't care. I don't care. Because I can keep an eye on volatility. All right, what are we doing here? I mean, okay, so if we go onto Twitter now, and I'm sure everyone's like, see, bought the dip, buy the dip, or whatever. Okay, what if by the end of the day, we come right back down here to 5150 or 5100? What are they going to say then? What are they going to say if it comes up to 5,300 with no consolidation, no nothing? Like say back to 5,350 or something to fill this gap. They're going to say sell. They're going to say continue to buy. What are they going to say? What they going to say? Should I enter into the rocket ship? That's funny. Yeah, it would be actually kind of good to see this stall out and consolidate here, by the way. Just come in a little bit, a little dance around. That'd be actually a good sign. I'm self-taught, McWigan. But I mean, I've learned from, I mean, I guess you can say that I have mentors, but they're not like, they don't know me personally for the most part. Like I didn't like meet up with people or meet up with like an individual mentor or, you know, pay a mentor to work with me closely by like one-on-one or anything like that. But I read a lot. I looked at a lot of things, and I just all I did was experiment. I just looked into the market. I looked at cool things like rate of changes, and I looked at how things correlate and stuff like that, and I'd watch them and I'd find cool things, and then I would read other things about other people, what they saw from an intramarket standpoint, and then I started developing my own kind of edge with it, and you know, I started looking at like taking from all types of people, and then you know, that's all. And now I just trade the way I feel comfortable trading, and that's typically in a low volatility environment. Swing trading, playing breakouts. Day trading, I'll day trade every once in a while, but honestly, I've let off the gas on day trading significantly. I just enjoy swing trading much more. It's just personal preference. Day trading is cool because you make a little bit here, you make a little bit there. But swing trading, it's like I can put on a position and I can just kind of let it go and let it play out. And I don't need to be stuck to the computer. You know what I'm saying? So, and that's just going to differ with everybody. Some people want to see the computer. They want to be, you know, in and out that same day. And then they're flat for the week or going into the weekend. They're flat going into the, you know, next day or whatever the case may be. Or some people, like even like myself, I have multiple accounts. Like I'll have investment account, right? Which I don't even, I don't even know. It just goes down, goes up, goes up, goes down. I don't really care, you know? But it's also like what? I'm putting 10% of my income in there or 15% or whatever. So it's not like it'll get to a point where I have to pay more attention, obviously, but then my swing trading account, right, which I'll play more aggressively when I'm in a positive gamma territory, when we're above a rising 5-day moving average, and then I'll day trade some too when we're in this kind of environment. But still, I prefer swing trading. Yeah. Thanks, IK. Yeah, I like the set and forget. You know, it's really nice once you have a position. So like if I'm looking for a trade, right? If I'm pulling up a trade or whatever, I find the chart and I look for an entry and I look for an exit. You can just set it and you can let it play out, and you keep an eye on it obviously because you want to update, you know, your risk parameters. And my time frame for a swing trade could range. I don't typically do it through earnings unless if it's really in my favor. So we're talking like up to, you know, 3 months, you know. Couple days to 2 months, 3 months is pretty typical for me. Typically I fall really into that like week to 2 week range, 3 week. And then when things are like, if it's a smaller position, I really kind of just let it play out. Just depends on what's on at that time. And then I'll have anywhere up north of 10 positions at a time as like the high end, but typically I'm more around like 4 positions, 3 positions. This is my day job. You know, I was doing, I make content for people. I do my market brief show, Tommy. I started my Patreon I didn't charge a lot. It was only $9 a month. And I try to over deliver there. A lot of information. It's not an alert service or anything like that. Just a nice community. And I have a bunch of different like premium bots from TradyTix in there. And I give my watch list and things like that. But I did that so I can leave my career at Verizon, which I was at for 13 years, to make up for that kind of a replacement. And it didn't really replace it fully, but I'm still able to like, you know, be fine. Verizon, I made great money at Verizon. I did really good. So that was a very hard lead. I had like golden handcuffs, but it was just too hard to do both things, and I decided to do this. So yeah. Such a geek, Moonraker says. Dude. Rocket ship time. FT, you're funny. You know, I mean, Chip, that's what I'll tell you one thing, man. It just doesn't seem like the grass is ever greener. Like I thought, like when I was working like pretty much all the time at my day job or whatever. I'll be honest with you, like it was like I miss it because I was part of a team and there was a lot of collaboration and working together. And here it's like, yeah, it's like living the dream. I'm just at home though. There's nobody here. It's just me every day. You know what I'm saying? Like I don't work with anybody. It would probably be different if I had like a team and working, but then also it would also be like, okay, I would have to manage that fully, which I did not need to do necessarily with my individual team that I was on back then. So there's pros and cons, right? Sometimes when I was doing that day job, like I was like, dude, I just don't want to go to work today, basically, which my job was pretty cool because I did not have to go into anywhere specific. It was, you know, given a large territory and there's just a lot of travel and a lot of conference call crap and just looking through weeds, numbers, finding things that were working, finding things that weren't working, and then collaborating with the team on small changes and stuff like that. Here, I do that, but I just do it by myself. And it would be nice to be able to collaborate with some other people, but for some reason in this space, there's few people that actually want to collaborate, and it's like almost like in this space, everyone's trying to compete with each other. I find it weird. Very, very frequently, you'll run into somebody that's like super nice and wants to collab. It's not that rare, but like in the very same space, I feel like it's like kind of rare. I don't know. I don't know why. Yeah, consistent paycheck and benefits are definitely nice, especially the benefit portion. I'll tell you what, right now, not having benefits, health benefits and stuff like that, and all the various other stuff that they provided me with, it costs a lot of money. It's crazy. It's crazy. The Photoshop monitors, I know. I know. All right, so that was pretty close nail to this little spot up here. I don't know where the day is going to progress from this, but we're coming in obviously a little bit. We came right into and around that 52.75 in this kind of zone up here, 52.50. Market net flow. We did start to see a nice little green convergence here, but now we're back to gray, so still no real edge there. We're not down and out, but perhaps we come back in to retest this 5,200. That would make sense. That is the current put wall for net. And then that is one of the bigger levels for 0 date too. So this 5,200, 5,275 is kind of where we're at, right? Where we're in between this level here and this level here. And nobody's really reaching out further than this or below this significantly as it stands. So pinning it around this range could be a very, very strong possibility. What concept do you trade? Yeah, I'm talking to Michael Gayad live tomorrow. No one knows thyself. I'll be with Michael Gayad tomorrow. Tomorrow at 9 o'clock Pacific Standard Time. You first heard me, FT, on Michael Gayad's podcast? Cool. Yeah, Michael Gayad's the only one that actually reached out to collab with me. And he was super nice about it too. And this is when I had nobody, literally nobody was like really following me at the time. Oh, there was some people following me at the time, but it was, you know, I wasn't making any collabs. No one was reaching out. I think I reached out to a few people and nobody really wanted to work or anything with me. And then Gayad came out and reached out to me randomly, which is cool. But yeah, tomorrow I'm going to talk to him again. We'll see what he wants to talk about. I really don't know. I'll probably just talk about similar stuff that I talk about all the time, but maybe he can give some more information and I can ask him some questions. I think he wants to interview me, but I might ask him some questions because of how everything's playing out today, or has been playing out. So. Weekly expected move for the SPY. We're right there right now. Kind of floating around there. 519.58 the lower, 546.22 the upper. SPX was kind of weird. I expanded out on those moves, but it started off as $140 for the SPX, which is the accurate one. But I re-updated them when futures opened to 170, plus or minus. Just because of implied volatility was kind of blowing through the roof. So yeah, he was. Stock, yes. What time frame Northwestern can it be? It might be. Trade Brigade. Trade Brigade is actually another one that's been really nice to me too. I wouldn't mind collaborating with him too. He was pretty nice. Yeah, there's a few people that are obviously real nice. And then same with like Captain Jim James. Like he's always been really nice. There's plenty of nice people, but there's also some that are just like very strange. It's very strange. Like it's like a competition of some sort for whatever reason. Maybe it's just the industry. I'm not too sure what Trade Brigade said the other. I don't know if he said anything bad, but I would imagine he didn't. I mean, he's been nice to me, so. Like, oh yeah, he mentioned you the other week. Could be good, could be bad. All right, so we're pulling back into the anchored volume weighted average price for the PMI report. Is it PPI or PMI? It's PMI, right? Yes, ISM Services PMI. Thank you. Gosh. My brain, man. It takes a while to get it back. And we're just floating in and around the weekly expected move here. You say chip no good? FX, I never talked to FX. I never talked to them. I don't think. Oh, it was good. You're like, no good. I was like, oh, really? Weird. No, it was good. That's funny. Yeah, I never checked to FX. I think that just has to do with time zones, really. I don't know, actually. I might be getting them confused with somebody. Ron Walker. I haven't heard from Ron Walker. Yeah, there's a lot of, I think you guys are all naming the ones that would probably be okay, which is good. That means you guys are kind of on the right side of things. But there are definitely some on like Twitter and stuff that like are just like crazy. Tripping. He's from Australia. Oh, okay, that makes sense. Yeah, that'd be fun to do some like kind of collabs with all of them. I'd love that. You can give kind of like some trade ideas back and forth. That'd be fun. All right, we pull back into the PMI there, anchor volume weighted average price. Oh, okay, that's interesting. My strategic forecast. That sounds familiar. I'd have to look it up, but it sounds pretty familiar. I think I know what that one is, but I'm not 100% sure. But if I remember correctly, sounds like a pretty nice guy also. If I remember correctly, Tree Trunk. Rob Roy. I'm unfamiliar with who that is. Rob Roy. No, that does sound familiar. I mean, all these names sound really familiar. Pulling back into the ES daily volume weighted average price. This is pretty much like the only pullback of the day today so far. And we had this one from this high to this low, but that was kind of on a PMI announcement. So now that that's passed, this is really kind of, now we get to see kind of where, you know, where things might go if we're going to put in a higher low and so forth. But right now we're just floating around the weekly expected move, so nothing too crazy. It's pretty good tag here. And then we're coming back into that 5,200, not too far from it, so we'll see what that does. I can probably find the, you're talking about a 1 minute wedge. I can probably see that here. Probably looking at it like this. Or maybe even a higher wedge. Yeah, that was could be a significant. Let's take a look here at implied vol. Or not implied vol, my bad. Market net flow. Yeah, I would, you know, if I was looking for something to trade right now, I mean, I'm keeping an eye out. You know, I am looking, but, you know, I'm just not that excited. Look at the risers today. So big movers today happen to be kind of, they've changed quite a bit, but look at Kellogg today. This thing was crazy. This is a consumer staple. What the heck? Let's see what Walmart's up to. Walmart's holding up all right. What about some healthcare stuff? Healthcare coming off a little bit. Nothing too crazy. Yeah, in the midst of this volatility, it's kind of just one of those things. I'm just kind of pause out. What did I trade today so far? I traded a little bit of S&P 500 in the early session, just out of the gate. And then I got out of my DUST position, which is short miners. That's all I traded. I didn't do much today. I didn't do much at all. LNTH. Oh yeah, what's that up to? That was consolidating for a minute. It looked like it broke down a little bit. Yeah, just a little too crazy for me. I'll look at some of the give me a second here. I want to check out some names that are still holding up rather well. We'll go through some. So here, I'll go through some lists, some names from the tight list this week. So TYL. I mean, this name's holding up rather well. Tyler Technologies. Had earnings, saw a nice move, had some follow through. It's just consolidating, it's flagging out, holding up within all of this volatility. It's a pretty nice little flag right there. Volume's drying up, prices coming in a little bit here. I mean, that looks pretty nice. VIRT, pretty similar situation. Earnings consolidating, volume kind of drying up here. We have not really an inside trading day, but we had an outside bullish day there. And are we going to start to come back up into that 29 range? Possibly. So VIRT is consolidating here. It's holding up. Cube. Another one that's kind of just chopping around sideways in the midst of all this volatility, holding up pretty well after breaking out of you know, kind of this base of sorts. Is earnings. Yeah, earnings came, I think, already. Yeah. It's holding up rather well. Cube Smart. Musa, MUSA. Murphy USA. Also holding up rather well in the midst of all this volatility and a bullish trend. The thing I'd say I'm more scared about is if we are going to fully just, I mean, these are names that could potentially get hit if we get some more sell side, but just not the case yet. So they are holding up rather nicely. not a huge fan of initiating new positions here, though. Pinduoduo is still interesting to me. Just I'm not a fan of like the current economics of China right now, but this is still holding up rather well. And if the markets are going to bounce, perhaps that bounces these with them. We've been just kind of tightly closing in and around these ranges. But this day right here, I think it was this day actually, I said I'm not interested until it starts to come back up, and it's kind of just doodling around in that range with a pretty high implied vol. So it's just not a perfect setup, but then again, there's few good swing trading setups in the markets like this. I mean, there's a lot, but SK, this one's going to be reporting here soon. SPY is still trying to stabilize up in this range. Trying to. Yeah, Nike. Yeah, you're right, Jen. Nike is kind of hanging on there. I would prefer it just a little bit more blood in the streets for Nike, just down here in the 60 range. Like if it came down to the pandemic lows, I'd be like, yeah, that's awesome. I don't mind establishing, if you're like a long-term holder of Nike, I think that this thing could be at over 100 at some other point, whenever that might be. It could be a while. It's clearly in a bad downtrend. I don't think the brand's going anywhere. I think we'll see more change into next year. I think the Donahoe or whatever his name is, the CEO, I think his contract's up in April, and I think that he's not going to be the CEO anymore. I think that they're going to probably get somebody else in. And if that is the case, I think that I don't know how the market's going to respond to that, but I think that could be a positive thing, given the context of what it's been doing. So it could be a while for that to play out, but, you know, starting small, where it's not going to affect you if it falls another 10% or whatever. Have I looked in AMD? I think it was up on the day. Let's see where it's at now. Yeah, it's up on the day. I mean, when I look at AMD right now, I mean, these range candles are just wild to me. So I'm not like overly excited about that, but a pretty big bullish reversal for the day. So yeah, maybe it gets some more movement to the upside, but man, the ATR, the true range of these candles are just absolutely incredible. Right, and we're coming into what? We're coming into a declining 5-day moving average right here. I mean, this move from this low from 121 to where it's at, it did not even consolidate. It was a straight move up. So I'd prefer to see a higher low put in and then tighten up and then maybe make its move. Not always going to be the case, especially with volatility where it's at right now, but let's go into the trade tab and you can see just 4 days out by the end of the week, we're still looking at a $10 move, okay? $10 move. Where are we right now? 135. So that could bring us down to 125. Where would that be? It'd bring us right down to the lows of the trading session, or potentially right back up to these, you know, 45, which is back up to these, you know, not even the 200-day moving average, but it would be a nice move. HIMS report after the close. Yeah. $4 expected move for HIMS. And some change, 417. My camera, El Broken-O. Yeah. Wait, yeah, it overheated. I think it's actually not my camera. I think it's actually my capture card. I figured that out. I've been focusing in on my camera, but that's, yeah, not the case. I'll let it cool down for a second. All right, let's see here. We're gonna recover a little bit. Came down, we came pretty much right into that 5,200. Boom, 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 boom. Yeah, so we're about 56 cents holding that 519. That is a important level that you want to hold, is that 519. And we're just, like I said, we're floating around that PMI expected move, and we're at that weekly expected move right now. Just tossing and turning a little bit. Healthy to see this actually pull back, especially if we can start establishing a higher low. That'd be at least a little bit better of a sign. Not too shabby. All right, I think I'm gonna actually call it for the live stream right now. And then I'll make a market brief here a little bit later and conclude some of these thoughts of what's going on here. But yeah, as it stands right now, we're just kind of floating in between these, the 5,200, 50, 5,275 right here. We came into this box, we came off right to 5,200. Market net flow, still not giving us anything. The main areas, 5,200 for the day for 0 date and 5,275. That's kind of where we're playing in between right now. And there's not much reaching out above that, not much reaching more below that. So in this area is kind of where we'll see a little bit of chop as of this moment, as it stands right now. Zoom out a little bit. We're still in negative gamma territory. We're below a declining 5-day moving average too as well. And we're just right by at that weekly expected move. With implied volatility, that is very, very high. So if I go into SPX, or we'll just go to the SPY to make it a little bit easier here. We go into the trade tab, you can see just even tomorrow we're looking at, and this will change, right? But we're looking at a $10 expected move, and then even till the end of the week is 17. These are the largest moves that I've seen for some time. VIX volatility came off a little bit, but it reached incredibly high. And if you look back, you know, this is one of the largest moves, and we're still in the 30s. So even if price action comes down a little bit, volatility could potentially remain elevated. So I think you got to be just open to the idea of seeing bigger moves to the upside, bigger moves to the downside. That's just what's going to happen. More on that a little bit later. But yeah, I'm going to take off. Y'all be careful, be safe out there. Appreciate you being here. CFT. See you, Nova Hammer. I'll quickly go over that. You saying, asking about PLTR. I don't really have too much thoughts here, but the expected move is 3.66 for PLTR, and for CRSP, 5.5. Later, Moonraker. See ya, AJ. See ya, Stinky Man. See ya, Chris Johnson. Hope today's stream helped out a little bit. Kept everyone calm in the midst of all this craziness. See you, Tony. See you, Old Testament. See you, Tree. See you, LJ. Bye.